Jennifer Beeston is a nationally recognized mortgage and real estate expert, celebrated for her commitment to financial literacy and consumer advocacy. In addition to being a #1 VA loan officer in America, her expertise extends across all loan categories, consistently ranking her in the top 1% of mortgage lenders nationwide. Jennifer's mission is to make the complex world of home financing accessible to everyone, from first-time home buyers to seasoned investors, by providing clear, practical advice that empowers individuals to achieve their financial and home ownership goals. With over a decade of experience, Jennifer has been featured in major media outlets like U.S. News, Business Insider, Time, and NBC News for her insights on mortgages, real estate, and personal finance. Her popular YouTube channel is a trusted resource for homeowners and investors alike, offering easy-to-understand content on home buying strategies, mortgage planning, and financial empowerment. Jennifer advocates for transparency in the mortgage industry and is deeply passionate about financial education. Her ability to simplify complex financial topics makes her a sought-after speaker and podcast guest, inspiring audiences to take control of their financial futures with confidence. All right, my financially intentional people. I am super excited, and you're going to have a blast listening to this episode because we are going to talk about some things, some traps you should avoid in the home mortgage space. And I am honored to be joined by Jennifer Beeston. She is a top 1% lender in this country, VA specialist, like all of the things. But she has seen some things, she knows some things, and she's going to put us up on game. So thank you so much, Jennifer, for joining us. I'm excited to talk to you.
Thank you for having me. I'm excited to dig into it and make it so some people don't get ripped off.
Thank you. Thank you. Thank you. And, for context, you listened to a podcast episode I did a few years ago. Now it's about 4 years because I've been in this lovely home that I'm in right now since 2020. And I went through some things when qualifying for my mortgage that I should not have gone through. And it was through Pulte Mortgage, and filed a whole bunch of complaints against them because they are just horrific. But I want people to avoid a lot of the things that are out there, a lot of the traps that people can fall into when applying for a mortgage. So let's just hop into it. Let's just talk about it.
Yeah, look, the biggest thing I see is people are just blindly trusting. It's like they meet a real estate agent at an open house. They do zero research on the agent. The agent recommends them to a lender. They do zero research on the lender. And if people get one thing out of the podcast, it's this: interest rates and fee vary based on the loan officer you talk to. They can be huge, as does expertise and skill. So you could get declined when you should be approved. And it could just be because the loan officer doesn't know what they're doing.
That is true. I think about how little we vet these people that we're spending so much money with. There's probably not a transaction that you're going to do in your lifetime that's as big as buying a mortgage, except for maybe you have $200,000 student loans like me.
Always fun. Those student loans, we love them as a lender too. We're like, wow, but you're in a good job. So that's good. They're
paid off. They're done. But I'm just saying, we listen to, like you said, we go to open house, we go with their lender. If it's a new construction, you see all these great deals and you have all this stuff that you get back, all these incentives to go with this lender. So you don't.
Incentives.
Thank you for the incentives, because I was like, screw Pulte Mortgage, forget all these incentives. And as a matter of fact, if y'all keep on playing with me, I'm going to just drop out of this deal, and ended up going with my own lender. But we don't do our due diligence. What should people do in order to properly vet their mortgage brokers, their lenders?
Yeah, so there's a couple different things. Like, first of all, if you're doing new construction, most builders have an in-house lender that they're going to be trying to push you to. And I refer to them as indoor cats. These are loan officers that never have had to get their own business. These are loan officers that don't really have to do a high level of customer service because you're being paid to use them. And a lot of times people, especially with the new build, they just go, oh, they're going to pay my closing costs. They're going to do this. They're going to do that. Wait a second. Sometimes the way they're giving you all those incentives is you're paying a higher rate and you're paying higher fees. So first tip would be, if you're looking at new construction, always get a second, a third opinion from a banker, a mortgage lender, a broker versus what they're giving you, because sometimes we'll see it where it's like a $10,000 credit. The buyer's still coming in with a ton of money. I look at it and I'm like, yeah, the 10,000's in the rate and you're also paying all these points that you don't need to.
Mm-hmm.
So really verify. And then if you're not doing new construction, look for reviews. People assume if I go to my bank, I'm going to get a discount. I don't know about all banks, but I used to work at a bank back in the day, and the loan officers got paid less on the loans that were for people who already banked because they were assumed they would just keep working with them. Credit unions can be great on certain products. Mortgage brokers, are they always lower? No, it depends on the broker. Mortgage lenders, look for reviews. Never. Do not take a recommendation blindly, because I think one of the things that people don't realize as well is that there's in the industry, and it's illegal and shouldn't be going on, but sometimes someone's recommending someone else because they're getting some type of kickback. Mm-hmm. You really have to look for third-party reviews, compare rates and fees. A good lender's never offended if you're shopping us. We're like, please shop me. Let's go.
Yeah. And that's what I ended up doing for my dad's loan. And I was like, oh, actually, you have a really good rate. But how do people shop lenders? Because I know a lot of people are like so scared of a credit hit. Like, if I go over here, they're going to pull my credit.
Oh, it's too much.
Yeah.
Yeah, it's too much. It's funny because I'm so glad you brought up the credit, because people are like, I don't know if it's because of the credit bureau advertising, but they're so hyper focused on it. And you get to shop multiple lenders within a 45-day window. You can go on the Consumer Finance Protection Bureau website, and they say that, and it shouldn't hurt your credit. Also, most lenders up front, they're not doing a hard check. They're doing a soft check. Mm-hmm. So that doesn't even touch your score, but there is a risk with that. I always do pre-approvals that are fully underwritten, and you've got to do a hard credit check for that because you can't close a loan with a soft. Sometimes you'll see score variances. So if a lender quotes you a rate and a fee based on a soft, but your hard comes in lower, that can affect the rate and fee that you get. So reviews, third-party reviews, interview, don't just go online and look at the clickbait. It's always clickbait, and look for someone you can talk to. So important.
Mm-hmm. And talking to people is really important because you can check their vibe. There are so many lenders out there that just do not have any kind of customer service skills. They don't get back to you. They're rude. They're short. They don't answer your questions. They're just like, oh, this is what it is. And I'm like, hold on, homie.
No, it's crazy. It's so crazy. I was talking to someone, actually it was this weekend, and they're like, yeah, we were talking to this lender and the rate they quoted was really high. And they told me the rate and I was like, Jesus, that's crazy high. And so they said to the lender, hey, that rate feels a little bit high. And he goes, if you can't afford it, you shouldn't buy a house. And based on the numbers we have, you can afford it. And it's
what? That's so
just because I can afford to get ripped off doesn't mean I should get ripped off. Period. It's craziness. It's just craziness. So vibe check, I think, is really important.
Yeah. So what are some other things that you've seen out there in the lending space that just like really annoys you?
Oh my gosh, there's so many. I could go on for days. Okay, I hate instant approvals. You see the ads all the time where we'll approve you in 10 seconds. I'm here to tell everyone that's not how getting a loan works. If you guys put in your information, the way that you get that approval is based on what you put in. So if the lender declines you after you've already had an offer accepted, you paid for an appraisal, you paid for inspections, they just go back to the consumer and go, that's what you put in. We just got your docs now. So it's crazy. It's crazy. Right. Guys, if you're going shopping for a house, get a fully underwritten pre-approval from a lender that you have vetted. Don't be afraid to ask questions. don't be ashamed that you're shopping. Be proud of it. And if they won't do a fully underwritten pre-approval, why are you giving them your business? Yeah, I don't get it. It kills me. What else? Bait and switch. Bait and switch is huge. So talking about rates is really important. And one of the things that I'll see is most lenders, we're not going to lock you until you're in contract, meaning the seller's accepted your offer. We have a timeline. That's when we can know how long we can lock for. And what I'll see sometimes is these loan estimates go out to buyers. They're really low. Wow, that's really good. It's not locked. And then a week or so before closing, that loan officer says to the client, hey, we really got to get you locked now. The client goes, what do you mean I'm not locked? I thought I was locked. And they go, no, your loan estimate was never locked. You never told me to lock it.
Because they knew to tell you.
They're supposed to be psychic, but it's so competitive in loans right now that we're seeing people do some really dirty stuff. And as a consumer, the best thing you can do, if you're in contract and you're going with this lender over this lender because of the rate, you need them to lock it. And you need to check your loan estimate because sometimes they'll go, yeah, I got that rate. There's no points. And then you get the loan estimate and it's locked. And we have people send it to us and we're like, so you're paying 2 points. What? They didn't tell me there were points.
Oh my God. That is so scary. But I feel like that's what happened to me. Oh, you're going to get this rate. You're going to get this rate. When it was time to sign on the line, they was like, no, this is the rate you're going to get. And you have these points. And this is the best deal out here. So you just need to just go ahead and sign. I'm not getting goofy. Like, why would you? I'm sure there are people that would just sit up here and listen to you, but I'm not stupid. No, we're not going to do this. I'm going to find a better loan.
Yeah, and thank God you did. But the thing is this, they don't teach this in high school. No. They don't teach this in college. We're taught all this stuff that has no bearing on our lives. Yet the stuff that really affects us financially, you have to go out and look for resources like your podcast, my YouTube, look at all these different resources to get the real deal.
But then that's a whole nother subject. And I know this annoys you too. It's like all these influencers that are telling you.
The fakers.
This information online that you're just like, oh my God, this like too good to be true stuff. And that people are falling for because everybody's dream to own a home, right?
Yes.
And so a lot of times people just do it by any means necessary, especially if they are being told this information, like they can afford it and they really can, or the terms are crazy and they don't know how to read contracts. They don't know. People don't even know what points are. People look at the interest rate and then they look at their payment. Basically, people are just like, can I afford this payment? And don't really understand what they're paying.
And the payment's being totally manipulated as well. What I do with my clients is after I fully underwrite them, I go through every closing cost line by line and I say, hey, this is what I control. This is what no lender controls because it's other people. Yep. And property taxes and insurance, that's where we see the manipulation. I'll have someone say, Jen, his payment's lower. And I'm like, show it to me. It's because he estimated $25 for homeowners insurance in California in a fire zone.
Come on now.
No, right? It's never going to be that. And taxes are based off of $100 and it's a fake payment. We don't control taxes and insurance. So it's a bummer that consumers have to be so aware, but they really do, especially right now. The mortgage industry, for most mortgage professionals, it's been the worst 2 to 3 years of their lives. Huge boom. And then it's just been like, we've seen people who used to do hundreds of millions of dollars worth of loans, and they're doing like 3 a month. You got to really watch out right now, especially with that payment.
And is that just because it's just the economy? The rates are so high. I don't know. I feel like the rates are high, but the houses around me are still selling like crazy.
Look, there's a lot of the country where prices are not coming down, and they're not going to. You've got all the housing crash bros, as I lovingly call them on YouTube. The market's been ready to crash every 6 months for the last 5 years. But the bottom line is supply and demand. You're in an area where there's not a lot of building. there is a demand there. And
Yeah.
it's just, I always think of the state of New Jersey. New Jersey hasn't come down in price. There's a lot of states where even with the huge jumps we saw in 21 and 22, they're still appreciating.
What I've seen that kind of just is scary to me is places that used to be affordable, Florida, the housing prices are comparable to here. But how are people paying for these houses when they're getting paid $20 and $30 an hour?
So I actually moved to Florida from California 2 years ago. So I'm a great example of that. So you saw states like Texas comes to mind, Florida, North Carolina, Tennessee.
Yeah.
Those prices started going up because you saw people leaving high tax states like California, New Jersey, and New York. If you look at the Florida prices, especially, like I think of Miami Beach, it's a lot of outside influence that have pushed these prices up, and it's making it really hard for people who are making it's the Bay Area story, but it's now nationwide.
Yeah. Yeah.
Because I started my business out in the Bay Area. The Bay Area has been rough for over a decade.
Yeah.
Yeah. But it doesn't mean that housing is impossible.
Right.
It just depends on where you are. And the people who moved from California to Florida or those other states, they moved there for a lower cost of living because of state tax. Also, still the houses are more affordable.
Yeah.
So that's what I always suggest to people. If they can work remote, if they have a job, there's certain parts of the country where Aspen, who can afford a house there that's not a billionaire? Anyone?
No.
Yeah. Move somewhere if you can, where you can actually afford a house and a life, because that's the important part, the life.
And I tell people that even in the Bay Area, you're going to make a good salary, but don't be house poor. And my definition of house poor is your mortgage, everything included, being 30% or more, over 30% of your take home pay.
Ooh. I don't know if anyone can buy a house in the Bay Area with that rule.
Right. But then I feel like you have to be creative. First of all, I know it's hard. It's not impossible. It's hard. Maybe you need to be in a multi-generational household. Maybe you need to do some house hacking. Maybe you need to buy a little bit smaller, older home. It's not impossible. You just probably won't be able to check off all of those things on your list. But how do you define house poor?
I'm going to go into that in a second, but I just want to say, I feel like this might help people, no matter what price point people are qualified, they never check off everything on that list.
Yeah.
I've got people in every price range, $100,000. You can still buy houses in some parts of the country for $100,000.
Where is that?
And there's little pockets, Kentucky, Ohio. And they're like, if I could get to 200, and then at 200, if I could get to 3 and 5 and 2 million, if I could get to 2.25, everyone's always, that list is always a little bit higher above. So I would probably just pick a couple key things and toss that list.
Yeah.
House poor, I think, is a huge risk. And it's actually why I became a lender. It's because before I was a lender, I accidentally ended up house poor. And that stayed with me. It stays with me to this day. I remember getting the bill and almost dropping my son, who was almost 2 at the time. We were at the mailbox, almost dropping him because I was like, I wasn't on the mortgage. My ex-husband at the time was. And I looked at that payment and I said, oh my God, how are we going to pay this? And that's what I think people need to understand. Lenders can qualify you to a point where you cannot afford food. I can't stress it enough. So never go to a lender and say, hey, what's the max? Yeah. And people say that to me. They're like, Jen, what's my max? And I say, absolutely not. I want you to sit down with a budget. I want you to tell me the payment that you can afford monthly, and I'm going to do my numbers based on that. If you want to go up and down from there, we can, but I am not starting out here, because once I start here, I'm never going to get you here and you're going to hate me.
Because you start looking at houses at that price point and then
Mm-hmm.
you convince yourself, I am very
Oh,
money savvy, but I
mm-hmm.
have done that too. You convince yourself, first of all, that you deserve that house. You can pay
Mm-hmm.
for it. And if you can't pay for it now, you'll figure out a way to pay for it. And so you do these crazy psychological money games in order to make that mortgage work. But also the lenders are telling you, yeah, you can afford it. You can afford it because they base it off of gross income. Like you said, they can make you a mortgage, but you won't be able to eat. Why is that even allowed?
I don't know, honestly, because I was thinking about it. What's interesting, because income tax is something I think about a lot, right?
Mm-hmm.
It's one
Mm-hmm.
of the reasons I left California, which is I never thought I would. And as a lender, you're right, we go off of gross income, but $100,000 in terms of how much someone's going to bring home in, I don't care, pick a state, New York versus $100,000 in Florida, they're going to come home with two very different amounts. But as a lender, we're not taking that into play. As a lender, we don't consider, unless it's a VA loans are different, childcare.
Ooh,
Childcare, yeah. Childcare. One of the gals on my team actually ended up becoming a stay-at-home mom because childcare was going to be $1,500 a month, and she wants to have a second child, and she was doing social media. We don't take that into consider. How much is
yeah.
childcare in the Bay Area? Do you have to
Let
give
me
an
tell you,
arm?
it's more than my mortgage. So my mortgage is $3,400 a month. My child care is $4,000 a month.
Whoa! Wow! Wow. Okay, that's the thing. Lenders aren't looking at this, and
Mm-hmm.
we can't. Here's where it gets weird too. So as a lender, if you say, Jen, I really want to go to XYZ, if I can make it work, I have to make it work. Even if I ethically don't agree with it, I can have the
Mm-hmm.
conversation of, hey, yeah, you can do that, but can you please do a budget? And this childcare issue is like, imagine if a lender max qualifies you, you're done. You're done.
Done. Toast. Yeah.
Yeah, I hope you want a second, third, fourth, fifth, sixth job, or you
That's
have
it.
rich parents because you're hosed.
Yeah. Yeah. Is ridiculous.
Mm-hmm.
Like ridiculous. And the thing is, that's just childcare, right? You're not even talking
Yeah.
about, first of all, most
Gas.
people don't even realize how much money they spend a month on food because
Oh,
they
yeah.
don't do a budget. They don't track their spending. But yeah, people just don't know. So I think that really get an understanding of how much you're spending every month. So that's what you're saying. Like when
Mm-hmm.
you do a budget, like really, really look at and calculate how much are you spending a month? Go at least 3 months back and see like how much are you really spending to
Yeah.
really ascertain how much you can afford.
And what will you cut? Because what I always
Yes.
hear is when I get this house, my changing habits will spend. And I'm like, no, they won't. They will for the month. They'll
No.
change for a couple days.
Yeah.
But one of the things I talk about a lot is, let's say, because I see this where the rent's $1,000 and they're going to a $4,000 payment and they're not saving $3,000 a month, so the question is, okay, before we hop, let's start making that payment to our savings account and let's
Mm-hmm.
see what it feels like. Because if it's miserable, don't do it. It's not worth it. I'm a lender saying don't buy a house. So, but if it's going to ruin your life, don't do it.
But I don't hear those messages a lot. And I just feel like there's so much pressure to be a homeowner
Mm-hmm.
that you'll hear the opposite message.
You have
You
to
can make it work.
stretch. Yeah.
Yeah.
Everybody, it's always hard on your first home. You just have to stretch. Maybe you can sell some blood plasma.
Please don't.
Sell your stuff on Etsy, like your soul. I don't know. It's terrible.
First of all, I've been there. I've done that. I went through the housing market crash of 2008, so I have a legit fear of being house poor. And I am not the person that's going to tell you to buy a house by any means necessary because sometimes it just makes a whole bunch more sense to rent. And people will
Yes.
tell you, oh, renting is throwing away money. No, it's not.
Not always. I mean, I'll tell you this. I'm renting right now. This is a rental. And you
See?
know why? it doesn't make sense for where I am. I'm not ready to make the commitment. The area is not environmentally stable. If I look at my long-term financial goals, there's not enough stability, right? And that's what people need to think about is, do I want to live in this area for a while?
And what's a while? Because I say, if you're not willing to stay there at least 5 years in that house, it's probably a bad investment.
Yeah, I would say it depends on the state. For California,
Mhm.
yeah, probably 5. For others, I would say minimum 3.
Okay. Hmm.
Okay. The only time I change that is, for instance, 2 segments. We have people who are buying their first house 3% down. They're living there for a year, year and a half, turning it into a rental. Then they're buying their next one, right? Or I was listening to the one about your children and how you're going to want them to do house hacking with their first
Hmm.
house. If you can get a duplex as your first house or a multi-unit, they're conventional, still seeing FHA more than conventional, or VA, live there for at least a year and then let's go to the next one.
Right.
But there's a lot of research that goes into that. Is this property going to cash flow? Because buying a house and thinking you can sell it for a year and not lose a ton of money, I don't know where that happens unless you're doing flips, and flips are risky.
What is it when you don't have a house for 2 years and then you sell it? What's the tax?
Oh, capital gains? Yeah, and people need to talk to a tax advisor as well. So you have to live there for at least 2 years before you sell. Otherwise, you get hit with capital gains.
Yeah.
And then in the investment realm, there's other things a tax advisor would be definitely better. But also, one thing people don't talk about is the stability of the relationship you're in sometimes. You'll have people that are in real bad relationships, and I'm sitting there listening to him be like, hey, don't tell her what's on my credit report. And her being like, what's on his credit report? And you guys are both going to see this. You're both on the
Yeah.
application. Maybe
Yeah.
we should sort out our distrust of each other before we hop into this house together. If you're in a relationship that you're not comfortable or secure in, hold off on buying that house until you settle out that mess, because it's a mess getting out.
Oh, come on. I'm so glad you brought that up because I can't tell you how many times people stay in horrible relationships because they're
Horrible.
they're trapped in this housing situation together.
Mm-hmm.
They can't afford
Mm-hmm.
to get out, not even to
Yep.
rent. Like they can't leave.
Mm-hmm.
And nobody talks about that either.
It's something we should all be talking about. The
Yeah.
other thing is, from a couple perspective, one thing I would say, if people are, going to be buying with, whether it's a spouse, a boyfriend, a girlfriend, a best friend, you need full financial transparency.
Yeah.
And the other conversation that I get in where I'm always like, okay, I guess I'm part of this now. I'll talk to one person and they'll be like, oh, he's going to pay the whole mortgage. And he'll be like, she's going to split it with me. And I'm like,
What?
you need to talk.
Yes.
I don't know. Have you found that people don't talk about money in relationships sometimes?
They
No.
don't. And that's why I always like, listen, I don't care if you're just boyfriend, girlfriend, if you're married. If you are doing a large transaction like buying a house together, you need to have a prenup or a partnership agreement in place.
Yeah.
Because that'll force you to sit down and look at the numbers.
Mm-hmm. And one of the messy things is, let's say you have 2 people, they buy a house together, they're not married, they break up. You guys have equal ownership unless you drew up something different. And like I would say, draw up what happens if you break up and neither of you can afford to buy the other one out, because you'll have it where neither can afford to buy the other one out. This one's saying, I'm not going to move and I can't afford the whole payment. You still have to pay or your credit's ruined.
Mhm.
And this one's trapped, and then you have to get lawyers involved, and it's incredibly expensive. So
Super.
it's just about doing your homework. That's all we're doing, right? We're not torturing people. We're just saying, do your homework.
Think it through. It's a major financial
Yeah.
transaction. But I can't emphasize this enough that there's so much pressure on being a homeowner and just
Mhm.
getting a house that people ignore this basic financial advice before getting into it. And they get into loans that they can't afford. They get into situations that might not be tenable a couple years down the line just for the sake of owning a house. Another thing they do is they buy a house and then now they got to fix up the yard. They got to
Oh, yeah.
build a pool. They
Buy
got
a
to
car that matches the garage door.
need a
And look,
brand new kitchen. And so it becomes like the problem that just keeps this hole that they keep on digging that gets worse and worse. Yeah.
look, you and I are both sitting from the place of experience,
Yes.
right? We've seen it. I see it every single day, all the different ways this can go, the good, the bad, and the ugly. And so it's not that people are, I just don't think they're educated enough. So that's why I think podcasts like this are great. This is why I've been on YouTube screaming, going, look at this, because you're right. One of the things I tell people after they buy the house is just try to wait 6 months and write a list of everything you want to do and how much it's going to cost and budget for it. Because a lot of times people do all this stuff and then they end up in credit card debt and then they're trying to refinance to pay off that credit card debt. But it's not always a possibility. Like the equity jump you saw from teen to 23, it's not normal anywhere in the country.
Yes.
So I feel like there's a lot of people that grew up in that market. So they think it's normal for houses to go up 50% in 2 years in certain states. And it's just not.
It's not. I've seen the negative equity. I've been through that. So I'm leery.
Yeah. You always want to try to make sure that you can afford the payment and you're not going to be forced into a refinance, which goes to some of the shady stuff on TikTok and on Instagram where they're doing these ads where they're like, you don't need a home equity loan where you make payments. We'll give you money and you don't make any payments. And seriously, I don't know if legit it's out there. And what it is they're taking a equity percentage of the house and it's a balloon loan.
Is it like a kind of crazy reverse kind of mortgage kind of thing? Or is this just a whole nother financial product that they made up that should be illegal? Like all those loans?
Reverse mortgages have a lot of regulations, whereas no, these are like, I can't believe these exist. Because as a loan officer, as a lender who does this for a living, I saw the ad and I was like, wow, how are they screwing? How does this work? And I had to dig through 10 pages to get to the terms and conditions. And that's where I'm like, oh, they're taking a percentage of the equity and the upside, and it's a balloon loan. Is the average American going to know that, oh, if I take out this loan with no money, I have to pay it back in full by XYZ date, or they can put a lien on the house or whatever the penalties are? No, they're not going to know that.
People don't read, especially if you had to dig that deep to get to it and understand it. Because a lot of people would not understand. What's a balloon payment? I don't know. You know what I'm saying? Like most people don't know that. I know that only because I grew up in that crazy
2008
market where balloon payments were some insane things. And I've seen people lose everything because of balloon payments.
Oh no, balloon payments. I cannot tell people to stay away from them enough. And it's not something that you see in traditional lending. You're not going to have a FHA or a VA or Fannie Mae, Freddie Mac with a balloon. It's usually these more predatory types of loans out there, which are generally someone trying to disrupt the mortgage industry without understanding the mortgage industry. So it's buy now, pay later, right?
Yeah, that's what I'm saying. I feel like these things are creeping back up after all these regulations that kind of got rid of all of those subprime loans. They're creeping up under these fintech like companies and people.
We're helping America have access to more money.
Yeah.
Are you?
And the thing is, I feel like more often than not, people, minorities, women are the people who fall prey to these things because you're less likely to be able to qualify or think you're able to qualify for conventional loans, which I used to think that, no cap. Like I used to think that I could never qualify for a conventional loan. I thought it was only going to be like a FHA loan or one of those subprime loans. Like I just thought, no, I'd never be able to. And then I started looking at it and I was like, oh my God, how did I not just look at these conventional loans? Because I thought conventional loans meant you always had to put 20% down and you had to make a certain amount of money and you had to be able to show a certain amount of money and all this kind of things that weren't necessarily true because the lenders I was working with just didn't have a broad array of products that they offered.
Were they just putting you in FHA straight away?
Initially, when I started, so I started when I was 21, I think it was all those subprime loans, like all of those crazy no doc loans.
Ninja liar loans, total.
Exactly. And then later, I think when I would talk to people, I would just like randomly be like, oh yeah, so what do you think I can qualify for? It was like they would automatically just assume I wanted an FHA loan or something.
See some of that, which I'm always telling people go, well, FHA is the first time home buyer loan. And no, it's not. And also, look, if you've got good credit, there's not a good reason to go FHA unless there's specific scenarios it could make sense. But conventional is 3% down. FHA is 3.5%. Right. But people do that. And you'll see lenders where they'll tell a buyer, oh, you should do FHA. They don't ask why. And the lender's pitching FHA because the interest rate's lower, right? But it's a more expensive loan to get. But they don't talk about that. They just shine the lower interest rate without saying, oh, lower interest rate, but you have mortgage insurance for the life of the loan. There's a 1.75 upfront.
Yeah,
So everyone should always ask if a lender qualifies you for any loan. Say, hey, is there a reason you didn't look at, if you're qualified for FHA, hey, why is conventional an option or did it not work, right? Conventional, may FHA make sense? And then if someone's a veteran and anybody's suggesting something that's not VA, be afraid because there's a couple situations where, FHA, the only situation FHA really makes more sense is if you're buying a multi-unit and you need the rental income to qualify. But if someone's saying, oh, you should do FHA instead of VA, that's wrong. Why would you pay mortgage insurance? I don't get it. Ask questions, ask questions, ask questions, ask questions, ask questions. And if the lender you're talking to is rude, dismissive, says you're asking too many questions, leave. Yeah. There's zillions of lenders. You can throw a rock and hit one of us.
But people don't know that. And I think another thing that's really disappointing is sometimes people get discouraged if they work with somebody and they're offered something that they can't afford or they're denied for a loan and they don't know that they can look at alternatives. Well, I just want to take the last part of this podcast interview to kind of like go through. I am a first time home buyer or I'm somebody that's got burned by the mortgage industry and I'm just trying to make the best decision when it comes to purchasing a home now. What steps do I need to take to make sure that I'm not being taken advantage of?
Well, number one, you need to do a budget. If you really want to buy a house and do it, you got to start out by understanding your spending as well as what you can actually afford. Because if you're going to ask a lender, don't do it. It's a recipe for disaster. Number one, you're going to do a budget. You're going to come up with a payment that you're comfortable with. And what I would say on that is that I would have the payment you're comfortable with, your dream payment, which probably isn't realistic, and then the payment that will make you throw up. Okay. And I'll say to people, I'm like, what's your puke point? Because sometimes it may be that you can handle $100 more than your budget. You just have to go back and go, okay, what do I cut? Yeah. And then the next thing is, look, you've got to research lenders, look for reviews, go online, get recommendations from people, but always verify and then trust and interview them. You don't have to just fill out an application. Call them. Are they willing to take 10 minutes to talk to you about your situation? Ask questions. Are they willing to answer them? If their response to every question is fill out an app, that's the wrong lender.
Yeah. Real quick before, when we're talking about budgeting and the payment that you could afford, the payment should include everything.
Taxes and it needs to be, when I'm trying to figure out that number for people, I want to know, because most people don't know homeowners insurance is a big one right now. People have no idea how expensive homeowners insurance can be.
Mine has doubled, for example.
Yep, which makes sense
Yeah.
for where you are,
Yeah.
and Florida is a very scary place for homeowners insurance. Yeah, we want that big number. So I
Hmm.
want to know taxes and insurance. And then we'll have the conversation of if insurance is this, yeah, I can go up a little bit more.
Hmm.
If insurance is this, we got to come down a little more. And
Hmm.
there's specific states like New Jersey, New York, where you got to pay attention to the taxes because it can vary by not just the county, it could be like the street.
No, me too. Where I live, the taxes are crazy different block by block.
Did you get hit with my favorite word? It's actually a terrible word, Melrose. Did you end up
Yeah,
with
so
Melrose?
I did have Melrose on the last property I brought in this city, but the block over, literally, because my
Hmm.
friend has a house the block over, none of that. Her taxes
Yeah.
were so much less than mine. All her
Yep.
fees, yeah.
Yeah, new construction in every state, they have different. California's Melrose, Texas has PIDs, but it's something people want to ask builders is, are there additional taxes? Because a lot of times they're not going to disclose that.
Yeah, that's how my lender advertised because they knew just because how this city is set up that's a big concern for people. Yeah, and that was one of my first questions because I was like, I don't want to pay all these
Well,
taxes.
and they can be
Yeah,
huge. I've seen Melrose that are like an extra $50 a month, but then
yeah,
I've also seen them when they're like an extra 500.
yeah, yeah.
That's going to affect your budget.
Mine was definitely closer to the 500 range. So
Oh, is it over now
that's
or
done.
not yet?
That's
Okay.
done. Yeah.
And at some point Melrose ends, but it's
No,
definitely
it was in
something.
another property. When I bought here, I was like, I'm not paying that extra tax. What
Hmm.
is the tax rate? And it was good because this property got added on to another older community. And so we didn't have to
Okay.
pay those special taxes. Yeah, that is something that people just don't even know to ask often.
Well, and people should do some research too, because look, I don't know what loan officers you're going to pick across the country. There's some amazing loan officers. There's a lot that aren't, right? That's also why I'm like, if the real estate agent recommends the lender, please verify that the lender is going to work for you and not
Hmm.
for the agent, because
Hmm.
it really benefits you to have these parties separate so that you have eyes that don't depend on this person for money,
Hmm.
that can say to you, like, I've gotten into drag out fights with agents because I'm like, I'm not going to close on this house. The buyer told me it has black mold. And and they're like, you don't have the report. I'm like, he told me it has black mold. He said there's a report. You need to fix this or we're not closing. My lender wouldn't require that. Your lender wants the buyer to die, young lady, but I don't. So here we go.
Oh my goodness. Yeah, that's crazy. Okay, so we're at budget. Make sure you can afford
Yes.
the payment. Come
Educate
up with
yourself.
educate yourself. Vet your lender
Mhm.
thoroughly.
Thoroughly. Ask questions.
Yeah. Hmm.
Don't send us chat GPT questions though, please, because they're terrible. They're so bad. Sometimes I'm
Do
like,
that. People don't know
oh
how to
yeah.
ask questions.
Yeah, look, and sometimes I don't know if people are just playing with me. But I'll get an email with like 72 questions, and I'm like, this is chat GPT because none of it makes sense. But it's questions that matter to you. If you don't know what to ask, just have the conversation. What should I be afraid of? What do I need to watch out for? If I'm looking at a house, what would be a problem to lend on? You want someone you can talk to.
Yeah, even questions I have a trust. So
Smart.
even things like that come up. Okay, if I'm going to put this under a trust, like what do I need to do in addition? Like all of those kind of questions. People don't know to ask that kind of thing, but a lender would know. Yeah.
And it depends on the trust and everything
Mhm.
else, how we would have to handle it.
Yep. Hmm.
But I feel like I was talking to someone who used to run one of the big call centers in America. And it's a call center now where I'm like, you better read that loan estimate because whatever they told you on the phone, it's not going to match. Right.
Mm.
And I was like, what do you think could really protect buyers? And he said, Jen, ask questions. When people start asking questions, the truth always comes out. So if people just ask and ask, and no one's going to make fun of you if you ask a question that doesn't make sense. I'll be like, I didn't think of that one, but I should be addressing it. Because
Hmm.
someone ask, and then you should be pretty safe.
Yeah. So if people, first of all, people don't know what questions to ask, but people also need permission to ask questions sometimes because they don't think that they can, or they think that they should be able to trust that person. This is a professional. I'm coming to you as a professional. I should be able to trust you. No, ask your questions because you could be thinking about something in a totally different way. Even as a nurse, right? You're coming to me, you're
Yeah.
going to have a baby. You don't know what the process is. You're
No.
thinking that things are going to go a certain way. Let's have a conversation. Let's come to common grounds because probably what you're thinking is going to happen is not what's going to happen.
Please don't bring me back to my childbirth. There was a lot of drugs involved, 2 epidurals. I don't handle pain. The nurses were fantastic. But no, that's the thing, is that I think people need to understand that just with any industry, there's good and there's bad.
Yeah.
And a bad loan officer can cost you a lot of money. It can make it so you feel like you'll never be able to buy a house. Because I see a lot of that. I see declines when they should be approves. But a good loan officer can get you to where you never thought you would be, in a house, financially stable, totally aware of what you got into, and prepared. So take your time.
Yes. Yes. Jennifer, people want to work with you. People want to access all your amazing resources. How can they get in contact with you?
I have a YouTube channel. There's always going to be a link to my calendar. I have a calendar. I actually have 2 girls on my team. All they do all day is answer people's questions. They're licensed loan officers. You don't have to fill out an app. You don't have to work with us. We're there so that we look at loan estimates from other lenders. So check out my YouTube. If I don't annoy you too much, hop on the calendar or give us a call and we'll help you every way we can.
And I'll have all your links. You have a book too, don't you?
I do. I wrote a book called Brainhacked, How Tech Trains Your Brain to Spend and How to Fight Back. Because as an early social media adopter, I saw the way the algorithms were working. And as someone who looks at bank statements all day, I saw the rise of the unconscious consumer.
Yep. That buy now, pay later.
That and the Amazon boxes show up to the door. No one knows what's in them. It's click bankrupt. It's happening.
Yep.
Yeah.
And then I want to bring you back so we can talk about all things VA loans, because I know you know about some amazing things you can do with the VA loan. So I'll be looking forward to that. And yeah, you have incredible resources on that as well if people want to just go ahead and dive into that now. Yeah.
Yes, I have a free VA course. It's everything you need to know from tip to toe about whether you're a veteran, a military spouse, parent of someone serving in the military, how to get that VA loan, and all the fun stuff you can do with it. Yeah, cool. Well, I appreciate it.
All right, so all of those links will be in the show notes, and I'm looking forward to having you back. But this has been so good, so informational, and I just hope people heed your advice and miss out on all of the things that we have personally gone through. Skip all of that and get into the house that you can afford and that makes sense for you.
Yes, we want that house to be a benefit and not a burden.
Exactly.
Well, I appreciate it.
All right. Thanks, Jennifer.
Thank you.